On this episode of the Who Is This podcast, brought to you by Sierra Pacific Mortgage of the Gila Valley and Double R Communications, me and Davis actually went solo today, decided not to have a guest on this episode. This is probably something that we'll do every so often, every month, every 2 months or so. We just had a conversation about kind of the home buying process, talked a lot about the don'ts, things that you don't want to do when you're buying a house. So definitely some good information in here. We shared some good stories and definitely think it's worth listening to, especially if you're in the market for buying a new house sometime soon. Hope you enjoy. Helmets. And they have like these little things right here that you just put it right down the helmet, dude. That'd be cool.
Should take it golfing.
The GoPro?
Yeah.
Or the mountain bike?
The GoPro. And the mountain bike. No, the mountain bike wouldn't be very practical.
I don't golf fast enough for these GoPros because they stop after an hour.
Well, you turn it on and turn it off for every shot.
Like each shot?
Yeah.
Why though?
Do you know why? Because you'll make a hole in one if you're filming.
You think so? I feel like Murphy's Law is you don't make the hole in one unless you're not filming.
There's way too many holes in one on Facebook for that to be true.
Right, but
little kids making holes in one, hole-in-ones, holes in one.
Holes in one. What is it?
Holes.
Yeah.
Holes in one.
Yeah, and then those little kids are ruined forever because they've already
never
done
going to
it.
have a fun golf again.
Never do it again.
How many holes in one have you hit?
None. I've never even come close. My father-in-law the other day, he was like, hey, first he asked me, he's like, what's an albatross? So I told him what it was. And then like the next day, he's like, yeah, I've been working on those albatrosses. He's like, I'm on pace after the first shot. He doesn't even golf. Well, we don't have a guest today. I think this is something we should do like
periodically.
Every now and then. Yeah.
Yeah.
And yeah. It'll give us a chance to bond. That's not the real reason
favorite podcast that I listen to is Theo Vaughn. And about once a month or once every other month, he does a solo podcast where he just talks for an hour, and those are some of my favorite ones.
That would be so hard to do.
I'll liken this unto Theo Vaughn's solo podcast.
Yeah. Well, it's just almost as good. That would be hard to just talk for an hour to yourself. But also, I think that multiple people live inside that guy's brain.
I know.
He's hilarious.
Yeah. It's true. So, how are things going? We've been with Sierra Pacific now for 7.5 months ish.
Mm-hmm.
How do you feel like things are going?
Good. In a simple answer, I think things are going really good.
Yeah. I
think that they're happy with us and where we're at. I mean, being a brand new branch, we just had a meeting with them today, and I think we're exceeding expectations for most startup branches, and all the costs associated and where we're at with our P&L and all that. Could definitely be better, which we're working on.
There's definitely been lots of growing pains as becoming branch managers. Like there definitely are things that I didn't think about going into it that we're learning, but it's been, I felt like we've had the support and we've had the connections with the people that we need to discuss with. So it's been good, and I've been happy with Sierra Pacific as a whole.
Yeah, me too. I think any of the things that we're not happy with, or not, I shouldn't even say not happy with, but frustrated with, is mostly learning experiences, like things that we weren't expecting. and things that we would be experiencing with any company
Exactly,
that we ended
yeah.
up going with.
Like
So
it's not anything unique to Sierra Pacific.
Mhm.
It is just the fact of becoming,
Mhm.
running your own branch, that because we didn't
Yeah.
know beforehand.
And just changing companies in general,
Right.
we were used to how things happened over there, and and it's just different.
Yeah.
But no, I think things are going great. I'm ready for rates to come down and people to want to refinance. That'll be nice. Anybody that's bought a house in the last 2 to 3 years, as soon as rates come down a percentage point, I think there's going to be a lot of people wanting to refinance.
Yeah, I expect a big refinance boom soon.
Which would be great for us.
Great for everybody.
Great for everybody. I'm just saying that for our new branch,
Right.
What we were just talking about would give us a boost because it would mean a lot more loans.
Right.
But absolutely great for everybody.
Yeah. It's coming. I truly believe it's coming. We'll see what happens in the Middle East. It seems like when rates kind of shot up from their, historic lows, it was right around the same time the Ukraine war broke out. And so that makes me a little nervous with the things happening in the Middle East, but
I never know what to expect, like how it's going to affect things.
Yeah.
I don't think anyone really does.
Yeah.
You have a lot of experts that project, but it's funny because you can find just as many experts to project this way that project this way.
Yeah.
Like you can support an argument on either side.
Yeah.
So, yeah.
Everybody.
How do you feel things have been going?
Great. Yeah. No, like I said, I'm super happy. I, like you said in our meeting this morning, and every time we've had this meeting, we have this meeting once a month where we go over our basically our finances. And every time we've had this meeting with our the people who oversee all the branches, they're super happy with us.
Yeah.
And so that's always a little bit of an ego boost when you hear that, and when you hear people are talking about us at the at the top level. It's exciting.
Yeah, you don't want to be leaving one of those meetings feeling like you just got reprimanded.
Right.
We definitely haven't had that
And
yet.
we've never had that.
Yeah, not even close.
Yeah.
It's always just been positive, and I think they're happy that we want to grow and hire more loan originators, and I'm ready to do that. We definitely have the support staff for it.
Yeah.
So it's just finding the right people that we like working with, and they're out there. I think that'll come with time too. I think that's something that we shouldn't force. I don't want to hire someone just to hire them, just because they're, wanting a job, I guess.
Right.
So, but yeah.
Right. I think, we that's another thing I am very happy with about Sierra Pacific is they are very, very strategic with any decisions that they make, even when those decisions are, they got to be made quick. So to that point, like we're not just going to hire somebody to hire somebody. We'll definitely vet them. And I think that we have a good grasp of what qualities somebody that would make a good loan officer needs. And we've met a few people now that have those qualities. So there's a lot of exciting things happening.
Yep.
And yeah.
We still haven't had our grand opening yet.
Yeah.
We keep pushing that back.
We've been busy.
I know. Yeah. So it's honestly a good thing.
Yeah.
We haven't had time. Probably July until July gets here. Then we push it to August again. But right now that's the plan is July. In the talks or in the works of maybe doing something with our neighbors in that building. So hopefully we can make that work. And it sounds like they're on board. But it's just a matter of getting it done, I think.
Our neighbors being Sevens Salon and Hamblin Dermatology.
Yep.
The chamber has reached out to them, and they sound
Yeah. And I texted Dr. Hamblin too, and because I think Vance was having a hard time getting a hold of him specifically, and he's like, yeah, we'd love to do that. So I think they're on board. We just got to find a date that works for everyone, and we'll do that. Do you think we're putting people to sleep?
Probably.
Yeah. This is super interesting to us, but
Yeah.
maybe not. I think let's talk about something that potential home buyers would value them. So we were talking about a little bit before. I think that when you're going through the home buying process, there's things that you shouldn't do. And so I thought it'd be fun to kind of talk about those and maybe share some personal experiences with client, or obviously not give details of the clients, but experiences we've had as loan originators with people that we've helped. Is there anything specific that comes to mind for you as far as a home buyer that did something they should not have done while they were buying a house?
Things that they shouldn't do. I can think of one recently. It was probably about a year ago, actually, that comes to mind first. So I had a borrower. They took a long time to find a home. So we had initially done the pre-qualification right around November, and they found a home that they really liked, wanted to put an offer on it. We pulled their credit. Everything looked good. I think what happened is they put the offer on the home, then found some things about the home that they just were like, and ended up backing out. Looked for a home for another 4 months, found another home. We got under contract, pulled their credit again, because a credit report only lasts for 120 days, 4 months. So we had to re-pull their credit. During that 4 months, they had 2 missed mortgage payments on the home that they owned in Wyoming. And so you cannot have any missed mortgage payment. Well, let me take that back. I believe you can have 1 missed mortgage payment.
In the last 12 months.
In the last 12 months, they had 2. And so that disqualified them from being able to purchase that home.
For the next year.
We had to wait a full year, or at least until one of those missed lates expired. And, the story does have a happy ending. They were able to purchase a home. So that was fun to be able to help them. After that, it was devastating to have to tell them, hey, what happened? You missed these mortgage payments. And they were just like, oh, we were trying to save money for, this and that for the purchase of a new home. And anyway, it's one of those things where because every client I have these conversations with them, like, okay, here are the do's and don'ts going through the mortgage process. And that is obviously one of them I mentioned. And sure enough,
so that happened while they were looking for a house.
Right.
They weren't under contract or anything.
Right.
Dude. So not to,
you can one up, man.
Not to one up you, but
I think that's what we're doing here.
Right. I honestly, and I think a lot of this is me and you are immersed in this world. So sometimes I take for granted this information as though it's like common knowledge, when it's really not for most people. They just don't think about this stuff. And I almost feel like when I first started doing loans, I may have explained these things a little bit better than I do now. I mean, obviously I still have those conversations, but when I catch myself when I'm having the conversations that I feel like I'm explaining too much, but I'm really not, because the reality is people need to hear it. They don't understand. So anyways, I had someone.
I will say definitely case by case. If I'm working with a first time home buyer, I'm very thorough.
Yeah.
On, okay.
Well, and it's like
but if it's somebody that's bought a home several times.
And it's kind of a fine line, because you don't want, if it is someone that's bought a home, or even, I mean, honestly, I find people that haven't ever bought a house, but they do a lot of research, and they're the type of personality where they maybe think they're smarter than they actually are on the topic. And so it's a fine line, because when you're having these conversations, sometimes, you might offend someone by making them, it comes across as though you think they're stupid, which that's not the case. It's just, so I've had clients like that, like, you know, I'll start going into that stuff. And they're like, yeah, I know, you know, and it's just lots of different personalities and stuff out there that you have to kind of, those are the challenges of this job of, you know, you have to read people and how to talk to them. But anyways, I had super nice couple. This was earlier this year. Super nice couple. They had their house they owned a house already, had it under contract to sell, were under contract to buy another house. And for whatever reason, they didn't make their mortgage payment on their house because they assumed, well, we're selling it. You know, it's not a big deal. And so they didn't make that payment, and it was only one, fortunately, but because of that, it tanked their credit, and so they didn't qualify. So the whole deal kind of fell apart.
Well, in the meantime, I remember this one. In the meantime, you were also working on credit repair for them to help them get a better interest rate.
Right.
Or something.
We were already working on it anyways, and then that happened. So it kind of blew up what good we had already done, and it made it to where, you know, their score it wasn't going to work out. And yeah, so, but again, silver lining of the story is got him in touch with Dennis, our guy over, which Dennis, honestly, we need to create an event for him to come and do here so that he's in town, and then do a podcast with Dennis. Like, awesome. That would be a great podcast. Anyways, he's been working with he called me the other day and said, yeah, they'll be good to go first week of July. So I followed back up with the client. And he was like, yeah, man, should be good in July, which is perfect because we just found our dream house. And I'm like, see, everything happens for a reason. Yeah. Like, they like this other house even more than the one that they were going to buy. So I am a firm believer that everything happens for a reason. But yeah, lesson learned, keep making your mortgage payment. Because even if you have you wouldn't, but even if you had an 800 credit score, but with 2 mortgage lates on there, obviously those two things kind of coincide, but you can have a decent credit score that normally you would still qualify for a loan. But if you have 2 mortgage lates in the last 12 months, it's a hard stop. Yeah. For conventional financing, for QM loans.
What are some other things that people shouldn't do or should do while working on purchasing a home or getting pre-qualified? So that are like the obvious ones.
So go ahead. Here's a common one, and this happened to me. This has probably happened to me 5 or 6 times over the course of my career, but I remember the very first time it happened, I was like, you what? You know, like, I couldn't believe what they had done. They had been building a new house with a contractor in Las Cruces. So, you know, it was a spec home, you know, it wasn't a custom made home. But anyways, they were under contract for 6 months. I've been talking to them the whole time. Got to know them really well. They've been really excited. And we kind of got to that point where house is getting really close to being done. You know, everything's looking great. Credit score and everything was fine. We got to the point where I was just checking in with them. I was like, hey, we just submitted it for a final clear to close. And they kind of just as like, though they were sharing good news with me, they're like, yep, we just went and bought a bunch of furniture for it. We're super excited. And I was like, hold on. What do you mean you bought a bunch of furniture? I was like, well, yeah, anyways, they opened up a line of credit for this furniture, which they were super tight on their debt to income ratio. And this new line of credit that they opened put them over the edge. And so they had this brand new house that now, because they went and financed all this furniture, which they kind of went a little overboard, I think, but they're getting a good deal, I guess. Anyways, we had to account for that new debt. And because of that, their debt to income was too high and they didn't qualify anymore. Fortunately, we were able to get past it. I basically said, can you return it? And they were like, yeah, we just bought it yesterday. We have this many. I was like, you guys have to go return it. Like, there's no other way to do this. So had to have that hard conversation with them, but they obviously wanted the house more than the furniture. So they were appreciative of it. So got it all worked out, closed. They probably went and bought the furniture afterwards, but that's not any of my business. But yeah, so that's another thing. Make sure you do not, and I tell people this all the time, once you're pre-approved, don't change anything. And when I say that, that means don't have your credit run for anything. Don't get any new debt, and because that's going to change. That could change your qualification. Don't miss any payments. Yeah.
You ready for me to one up you?
Yeah.
I am working with a client right now. Not only did they make a purchase while we're working on a refinance for them. They have an investment property. They're refinancing, and had the discussion, don't make any any big purchases. They bought a house, went and got a hard money loan and bought an entire house because it was too good a deal to pass up. So they are.
Which you can understand that.
I do. And I think I even had this conversation.
This was probably
I get it.
like that.
You know, you guys are getting a screaming deal on this house. However, we're in the middle of this refinance, and obviously we look at debt to income. This is a flip house that you guys are building. You're going to have a payment. You know, we have to account for a payment, and that payment put them over their maximum debt to income ratio. And now we have to wait until they fix that house up and sell it, so before we can refinance it.
Which, again, silver lining, might end up getting a lower rate.
Her excuse was she didn't think it would pop up because
it was hard money.
It was hard money, and it wasn't going to show up on her credit report.
Right. But why did it show up?
Because we do a title report.
Title searches, yeah.
Title searches. We on a title search, we know all of the real property that you own, real estate.
Which is an example of why it's always better to tell your loan originator everything.
Yeah.
Don't try to hide anything because it's going to get found out.
That's one thing that I wish real estate agents understood, because they, you know, everybody puts a lot of faith in us, and we put a lot of faith in our clients, you know, that they're being upfront and telling us everything, because stuff like that, it pops up, and we're, not to sound like a whiny baby, but we're the ones that, you know, eventually take the heat.
Oh yeah. People love to blame the lender. And I mean, there's definitely things out there that a lender should catch, you know, but I say it all the time, when you're dealing with individuals, the humans aren't perfect, and they, you know, we can only control so much.
Right.
You know, I can't control if someone goes and buys furniture, because I've had deals that I couldn't save because of something similar. You know, their debt to income shot up because they did something that they shouldn't have done. And we have those conversations with them, but you're still dealing with human beings, and sometimes they make bad decisions, and we take the fall for it. But I mean, it is what it is. It comes with the job.
Yeah. I recently worked with a borrower that from the very beginning, he really wanted to use a down payment assistance program. He according to him, he had money to come in with the down payment. But if he didn't have to, he wanted to use this down payment assistance. In order to do that down payment assistance, I had to get his credit score up. So we worked and worked and worked on getting his credit score up. But it was like playing whack-a-mole. Like,
fix one thing and something
one
else
step
popped
forward,
up.
2 steps back, fix one thing, something else would pop up. He would run up a credit card. Anyway, so we got super close. Closing date was coming, and the whole time I was like, okay, you know, I need to verify or substantiate the funds that you're using for closing in case we can't do this down payment assistance. Okay, I'll get it to you. Never would get it to me. And day came where we, you know, thought we had.
Well,
go ahead.
You were fixing his credit so that he could do the TPA, but he didn't do the necessary steps. And those things are always projections too. Right. But yeah, anyway, that's what happened, right? His credit didn't do what.
So I pulled his credit. It wasn't quite high enough.
Wasn't like a point low?
It was a point low because of, you know, didn't follow instructions exactly. Do exactly what I tell you to do, and it'll anyway.
Well, on that note, we run these scenarios, right? And so one of the things could be pay down this credit card to X amount.
Yeah.
And we will
Don't
tell
pay
you
it off.
X amount, and then they'll go and pay it down lower.
That is exactly what happened with this guy. Leave $10 on this credit card, and your score will be good. And what does he do? He assumes, okay, I just needed to get it down to 10. I'll just pay it off. Pays it off, and
did he close it too, or just pay it off?
No, he didn't. Well, actually, yes.
Which is even worse.
Yeah.
Which is even worse. Yeah.
Anyway, so yeah. So pulled his credit, didn't quite get there, and tells me I can't come up with that money. I'm like, dude, why didn't you tell me this from the get-go?
Right.
Like, if you knew this, why didn't you and this guy knew, and it was, super frustrating, but in one of those situations where it's like, as the lender, you feel responsible, even though nothing you can do to
Right.
prevent things like that, because you're dealing with humans who aren't always honest or.
Yep. Buyer or real estate agents tell me all the time, buyers are liars, which I generally give them the benefit of the doubt of they more just don't tell the whole truth most of the time because they don't think it's needed. We need to know that information. I think it's very rare that I come across someone that's just deliberately lying to me.
Right.
But, sometimes they don't mention that, oh, well, yeah, I co-signed for a car too, or, whatever it is, but they just don't think of, but that's why it's important for us to ask those types of questions, or for the lender too. So I got one. This sounds made up, but it's not, I promise. The very first deal I've ever worked on. It was going to be my very first closing ever. So I was hyped. I was like, sweet, first loan. I just got a clear to close. It was a family. It was I was working with the brother, an older gentleman. It was him and his siblings. There was 5 people on the loan. So it was also a very complicated loan for my very first one. Maybe not 5, but there was 4. There's at least 4. There might have been 5. Anyways, they were all buying this property together as a secondary residence up in the mountains. There's a little cabin, going to be a cool little vacation home for them all to share. So with there being so many people, it was a hard loan too. That's a lot of documentation that we've got to get, lots of hoops that we have to jump through. And anyways, we got it clear to close. I called him and said, hey, congratulations, clear to close. We're going to be closing, by the closing date, which is, next week. He's like, awesome. That's great. So super happy. I'm on the top of the world. First loan. It was a pretty good loan amount too. So it comes to, it was the day before the signing. We have to do verification of employment, or the underwriters do. Yeah, a verbal verification of employment, where basically our processor or the funder, whoever it is in the company that does that, calls the employer and says, hey, I just have to verbally confirm that so-and-so still works for you. Anyways, I get an email that says, hey, just try to do the verbal verification of employment. Employer says he doesn't work there anymore. And so I was like, that's got to be a mistake, So I called him and I was like, hey, who do they need to talk to? They talked to someone that, they just got the wrong information, just assuming that it was a mistake. And he's like, oh, well, no, actually, I had been considering quitting anyways, for the last few months. Don't really have to have this job. But bottom line, me and my boss kind of had a run in. We got heated, and so I just quit. I was planning on doing it in a couple of months anyway, so I just quit. And I was like, is there any way you can get that job back? He's like, no. So couldn't close the loan because we were using that income to qualify. He couldn't get the job back, so it was literally the day before signing, and he quit. So now, it's one of those things where I tell it was a really good learning experience for me, because I tell every single person that I do a loan with, once I get that clear to close, I say, okay, we're clear to close, but the loan is not 100% finalized until you have the keys in your hand, and that I let you know that it is officially funded. Make sure you don't go get any new debt, make any changes to your employment, anything like that. So I have that conversation with everybody. It sounds silly thinking that you have to tell someone not to go quit their job before actually funding or before actually closing. But a lot of times I think people hear clear to close and they're like, oh, we're done. I don't have to provide any more documentation, but there's still stuff happening on the back end to get that to the finish line. Yeah. So that was a hard lesson to learn. I was so bummed, dude.
That would make me throw up.
Yeah, dude, it was not. I mean, and fortunately, it would have been even worse. Let's say it was a first-time home buyer or something, and they were going to be homeless. Fortunately for the client, it wasn't a huge deal because it was a secondary home. They weren't going to be homeless or anything like that. I mean, that happens too. You've got, we're dealing with people's lives where they're in this limbo of going from one place to the next. So if you're not careful and a deal falls apart, they just sold a house, or they didn't renew a lease. They don't have anywhere to go. So fortunately in this case, he still had his house. It was just a secondary home, but it still sucked.
I know. I remember when I may have told this story on the podcast before, but when I was refinancing my house with you, I came in and I was like, I think I just had a stressful day at my job before and started asking you about, and I remember distinctly saying, I bet your job's not even super stressful or something, something along those lines. And looking back, like, could not be farther from the truth.
Yeah.
It is a stressful job for some of the reasons that we've talked about,
You're dealing with people. I mean, for most people, the biggest purchase they're ever going to make.
Biggest purchase they're ever going to make. You're juggling all of these variables, and if something happens, you're the one that
people point at.
And there's so many things that you don't have control over.
Yeah.
But you're still the responsible one.
That's one thing that I've definitely gotten better at. When I first started, I used to stress about all those things that I couldn't control, or if something went south, like I took it personally. I have gotten better at just accepting, like, sometimes deals go south and there's nothing I could have done about it.
Yeah.
Because if you take that and put that on yourself, like, it's way too stressful. It's more stressful than it needs to be. It's obviously always going to be stressful, but I've learned to accept, like, there's nothing I could have done about that, and there's nothing I can do to fix it now, and it is what it is. That doesn't happen very often.
And you just hope that, because I mean, our business is a referral based business, and you just hope that your referral partners understand, like, this is what happened, and they're, like you said, there's absolutely nothing that I could have done to about it, to prevent it, whatever.
And I've found, and that's why
I wouldn't have known about this thing, whatever it may be, until it came up in this report or this screen. That's part of what we do is we get the loan, we take the application, get them under contract, and then we start. There's a lot of things we do beforehand, but there's a lot of things that we're doing, and that's why a loan usually takes at least 10 days to do, because there's so many things that we have to review.
Yeah.
And some of those things pop up during that review process.
Yep.
And
that's why it's so important to have good communication with your referral partners, because nobody wants to be surprised, and it still happens. Like,
right.
It still happens, but usually if you have a lender that's communicating and telling you about, what's going on in the file, generally speaking, you shouldn't be surprised the day before closing.
Right.
Something like that. It happens, but even if I guess what I'm getting at is, there's certain clients that are more qualified than others, better qualified than others. And so occasionally if you have someone that, like, I can see the writing on the wall, like, hey, here's what's going on in this file, and here's what potentially could happen. If I have that conversation with the realtors, they appreciate it, because then, because it does take time to get through whatever it is you're getting through, and it might be a week before closing before you have that definite answer. But if you have that conversation with them at the beginning, like, here's the issues, here's what we're up against, here's what could happen. If it ends up unfortunately happening, they're at least not like, wait, what? It's not the first time they're hearing about it,
right.
So, and obviously you have to do it with discretion. You can't share too much of the client's, information, but that's why it's so important to have a lender that you trust and that's going to communicate with your realtor and make it as seamless as possible.
Yeah. One thing I wanted to bring up while we're doing this solo episode is why it is important to use a local lender, or some reasons why it would be important to use a local lender.
Mm-hmm.
I have a really good example.
Let's hear it. Can't wait.
So this one just happened to me. You know about this one, but I'll tell you the story.
Yeah, pretend like I don't know.
You don't know. So I was working on a loan for this couple, got them pre-qualified, got them under contract. The purchase price was $373. Beautiful home in Pima. worth every cent. 373. Got all their documentation, got it through underwriting. Everything was good. We were waiting on the appraisal. Got the appraisal back, and the appraisal came in like, I want to say it was like $40,000 low. Just, and that's another,
we could do a whole episode on appraisals.
A whole episode on appraisals. One of the things that's completely out of our control. There's nothing we can do about appraisals. To top it off, this one was an FHA loan. And so something that, the normal person wouldn't know about an FHA loan is, if I am selling my home and a buyer comes and is using an FHA loan and they get it appraised, that appraisal will stick with that home for 6 months if any other borrower comes and is using an FHA loan. Can't get a new FHA appraisal on that home for at least 6 months.
Which means if a borrower B, that doesn't work out with borrower A, and borrower B has absolutely nothing to do with borrower A, comes to try to buy that house and uses an FHA loan, they're stuck with that appraisal.
They're stuck with that appraisal. So, and nothing we can do about it. That's
for 6 months, yeah.
The guideline. That being said, it's also extremely difficult to get a new appraisal, a new FHA appraisal. You have to have rock solid evidence that appraisal was deficient somehow. So that's, I worked with the realtor, and that's what we did. We combed through that appraisal with fine-tooth comb to see if we could find any flaws with it. So we went through it. Well, first we submitted to the appraiser a reconsideration of value. Said, hey, here's some comps you didn't use. We believe this home is worth what the seller's asking for. Here's some comps. And for anybody that's in the industry, you know, appraisers, when you challenge, what their report says,
they don't like being challenged.
Challenged. They're a bit egotistical and dig their heels in the ground, and it's very hard to get. Some of them are
most
good. Yeah. Some of them are good, but some of them, that's what they do. They just dig their heels in the ground, and
you literally couldn't say anything to make them, because they're not going to admit that they were wrong.
Because they were right. Yeah. And that was the case in this one. We gave great comps, we gave great reasons, and couldn't convince them to increase the value at all. Sometimes they'll increase it $5,000, and this one was low by like $40,000 or something like that. Mm-hmm. And this guy wouldn't budge at all. So yeah, like I said, we went through that appraisal with fine-tooth comb, found that he had reported on the report that this home was involved in an arm's length transaction about a year and a half prior or something like that. And an arm's length transaction means the buyer and the seller have no business or familial relationship at all. And so his reason basically was like, there's no way in a year and a half that this home would appreciate the $40,000, or actually it was like, because it appreciated a little bit. He gave it a little more value than that previous sale.
So his reason for it being so low is because it had just sold for a lot less.
There's no way it could appreciate.
And it was an arm's length. He's saying it was an arm's length transaction.
Was an arm's
meaning
length. Meaning they weren't related. Mm-hmm. So we look at the county records, and I'm looking, and I see, okay, who the buyer is and who the seller is. And at first I was like, okay, yeah, it probably was an arm's length transaction, because I didn't recognize the wife in the couple that was selling the home. I'm not going to say her name, but I didn't recognize her last name because she had been married. And then I found out it was actually my wife that told me. She told me who this was, and it happened to be the daughter of the builder that built the home. So it was not an arm's length transaction.
Right.
So we went to FHA and said, hey, there's a major deficiency in this because these two people were related. And we went to the builder, and the builder basically said, we built that home almost at cost.
Right. And I'm just going to interject. Why that makes sense is if it's not an arm's length transaction, if I'm selling my property to a child, I'm probably going to give them a really good deal, and it's going to be, I'm going to sell it for a lot less than what it's actually worth. So that shouldn't affect what my daughter can sell the property for a year from now.
Yeah.
And that's exactly what was happening.
That's
so,
what happened.
Yeah.
So went to the FHA, went to our underwriters. Our underwriters were like, oh yeah. So they went to FHA and got a new FHA appraisal approved, which never happens.
Yeah, that's
it's
so unheard of.
hard to do. And because my borrowers, because they used a local lender, that is the only reason they are in the house today. Because had that been, whoever your online lender, they wouldn't have cared. That
they're not going to put in that time.
They're going to
just move on.
They're not trying to maintain the relationships with this referral partner that I have. They don't care about this borrower and their situation. They probably run into low appraisals all the time, and it just is what it is. But because they used a local lender that looked into that, did that digging, that's the only reason that they're in that house, which was their dream house. It's an awesome house, and that builder, I'm not gonna say who it is because whatever, but they build awesome homes,
right?
And that house is a wonderful house.
And I'll take it a step further. I mean, I completely agree that use a local lender because of things like that. I think that even most local lenders aren't gonna put in that much time and that much effort to get, because something like that is so rare for FHA to do that. So I think I'm not trying to take away from your point of using a local lender, but I'm just tooting your horn as well as you just being an awesome loan originator that went in and put all of that time to do that.
You're right. I mean, it is kind of an extreme example, but there's things like that'll pop up that only a local lender is gonna have the in to know those types of things. So
Well, and on the local lender side of things, I mean, how many times do you and I take a document to someone's place of work to sign or meet them? I mean, all kinds. I've gone to people's houses because they didn't, you're not going to get that with an online lender, so it's not going to be as easy of, the customer service thing is way more better if you're working with a local lender.
I have a good example of that. I'm working with a teacher at the high school right now, and we're trying to use this. Arizona has this they call it 301 money. It's like a grant program. So I was trying to get some more information on that. So I got the principal's number, called the principal and said, hey, can you explain this 301 to me? This guy happens to be an administrator, and for administrators, it's guaranteed pay. And the principal was like, yeah, if you needed me to write something about it being guaranteed pay, I can totally do that.
Yeah.
Again, somebody that's not local is not going to.
They're not going to put in the time.
First, they're not going to know who the principal
Yeah.
is to reach out to him to get that information. So, I don't know if using a local lender. There's 100 stories I could tell about things like that. If you want a way better chance for your loan to go through, it's going to happen through a local lender as opposed to Joe Schmo on the internet or Joe Schmo in Phoenix or Tucson.
Right. And I mean, honestly, let's even talk about the myths as why not to use a local lender or use someone online. People, I feel like a lot of times will use someone online because they think they're going to get a better deal.
It's cheaper.
It's not the
I'll
case.
beat them all day long.
Yeah, we'll beat them all day long. It's just not the case.
Yeah.
And usually what ends up happening is someone finds some advertisement or some type of marketing where this online lender is painting the prettiest picture or leaving details out as far as interest rate. It's just, they make it look way better than what it's actually going to be. People go down the road with them and then they get bad news at the end, and then they're pissed off at their lender. I mean, you and we work off of referrals. That's where all of my business comes from, is people talking about me, closing a loan with someone and then them sending their friends and families to me. And so because of that, I'm very motivated to make sure you're happy with me at the very end. And so I'm going to, when we first sit down and talk, I'm not going to sit here and just blow a bunch of smoke at you because I want you to keep working with me. I'm going to tell you how it really is. And I'm going to explain why, this advertisement that you came in with isn't true. It's not accurate, so.
Or if it is accurate, it comes with so many caveats or fine print. That,
right. Which, and I'll say, if it is accurate and it is true, 9 times out of 10, we can either match it or beat it.
Right.
I mean, that's definitely not unheard of. We do that all the time. But yeah, I mean, it's a mortgage myth. It's not cheaper to go online.
Right.
It just really isn't. And honestly, I would argue it's more expensive because of all of the outside value that you're getting with a local lender that you're not getting with them, that you're still paying for, so you're paying the same, but you're getting more.
Yeah.
And sometimes even paying less.
Right.
It's very case specific, but we're definitely not more expensive than someone that you find online.
Right.
Yeah.
If I lose a deal or not lose a deal, but if there's somebody like that I know that doesn't go with me, I'm a lot happier when at least it's with another local lender and not
absolutely
freaking Rocket Mortgage.
Yeah.
I'll freaking name drop, dude. Rocket Mortgage or Loan Depot or something like that.
I guarantee you they're not listening anyways. But yeah, it drives me crazy anyways, I shouldn't get into things that drive me crazy about doing mortgages, but there's quite a bit.
And then the obvious, who's on the booster club, who's supporting the local businesses. It's not those guys. It's local lenders.
Yeah.
And we talked about this kind of in depth with Reed when Reed was on the podcast, that going local is the only way to do it, in my opinion.
Yeah. Well, I mean, I can very confidently say that your experience will be more smooth and much more pleasant with a local lender.
Yeah.
In my opinion. What else should people not do when buying a house? Here's a myth.
Cosign.
On anything.
Yeah. I think a lot of people don't understand that, like, co-signing, even though you're co-signing, you have the same exact financial responsibility and liability for whatever you're co-signing for.
Yep.
You're not secondary to that person. You are equal partners in that loan.
If they don't make a payment, you're going to be hurt just as much as them.
And it's going to show up on both of your credit reports. Yep. If you co-sign, even though they're making the payment, it's on your credit report. It's on your debt to income ratio.
I have that. You just reminded me. I have that with someone that we're closing on a house early next month, but they had gotten pre-approved back in like February or something, and then they finally found a house, came and talked to me, and they told me, yep, I have all the same debt, no issues, all that. Did the credit report, and they had co-signed on a brother's car. She went and helped her brother buy a car. Luckily, the house that she found was less than what I had approved her for before, because she wasn't approved for that amount anymore. But it didn't prevent her from buying this house just because of it was a cheaper house, but it definitely could have. And actually, now that I'm talking about it, I think that the first house that she called me about recently, I told her, like, you don't qualify for that one, and then she found this one, which is working out anyways. But yeah, don't co-sign. Mortgage myth, I guess. I mean, not that that's the topic, but things that aren't a big deal is if you've already done a loan application with a different lender and you want to come and talk to us, it's not a big deal if we pull your credit again, as long as it's within 30 days of the first time. I have that happen a lot. A lot of people are like, well, I don't really like this lender anymore, but I don't want to have my credit pulled again. I always ask them, well, when was it pulled initially? Because I should get the same exact score if I pull it within this time frame. So basically, the credit bureaus just look at it as you're shopping mortgage companies. It's not a new inquiry every single time. Again, it's 30 days, right, from the time they first pull it. Yeah. So yeah,
I think it's actually 45, but
I always say 30.
30.
Yeah, just to give us a window there. Yeah. I have a story. This wasn't the borrower's fault by any means, but it's definitely a horror story for, I guess, things that could potentially happen. This was a new build in Las Cruces, and with one of the bigger contractors over there, they built the house they were supposed to, the loan, there was no issues with the loan. They were, golden borrower, had, great credit, all that stuff, no issues. So really this was one that I thought this was it was a done deal. They even had the clear to close and everything, but they went to do their final walkthrough. The morning of the final walkthrough, the contractor called and said, don't come to the house. You don't want to see this. The house literally caught on fire and burnt down. Now, I'm trying to remember. It didn't burn down completely because they were able to renovate it or fix it up. And I'll give the contractor kudos. They honored all their, because they ended up buying that house a year later at the same rate. They were able to give buy down points so that they could get the same rate. They did great by them by making it work, but it took a year, and they were literally about to close on this house, and I can't even remember what it was. I feel like something with the stove or something. Like it caught fire and burnt. Literally, it was in flames when they went, because they ignored them. The contractor said don't come, but they're like, no, we're gonna go, and they looked, and the house was literally on fire. Yeah.
I have a similar story. I had a borrower that we were going to close on Monday, but they really wanted to move in on Friday, and the builder was going to let them move their stuff in. And any realtor would probably say pre-occupancies are kind of a bad idea.
Yeah.
Just because
it's risky.
There's a lot that can happen in those 3 days. And I think it was the day or a couple days before they were going to do that pre-occupancy, which they were advised not to do.
Yeah.
The builder's daughter's home burned down, and the insurance policy, had they moved in, their insurance would not have covered that, and the builder's insurance would not have covered it because somebody was living there. It was no longer a construction policy.
Oh, man.
And so they last minute they're like, we're not moving. I think they had to get a hotel or something. But I honestly, they made the right choice. The risk of that happening was low, but it was still there.
Still risk. Yeah.
You can't do that.
Yeah. I'm trying to think. Other don'ts. Even as simple as don't apply for a Best Buy gift card because it'll save you 10% on your most recent purchase. Yeah. Something like that's not going to kill a deal, but it's just going to make it more difficult for you.
More paperwork.
Yeah, because what's going to happen is we have to do a credit refresh at the very end. And so if we do your credit pool, 30 days pass or whatever, we do a credit refresh. If within that 30 days it shows that you had your credit run, then we have to go get all the documentation as far as what is this? Did you get new debt? So it just makes your life harder because now your annoying lenders coming and asking you for more documents.
And sometimes those, when it's brand new like that documentation is so hard to track down because you throw everything out when you get it. I'm not going to need this. I'm just going to get a statement every month.
Right.
Throw out all the terms and conditions of that credit. I had a Home Depot credit card guy applied for one, got it. Didn't make any purchases on it.
Just wanted the discount.
We had to know the terms.
Yep.
And so, it was annoying.
Yep.
I felt annoying, but I hope the borrower understood, this is why.
Yeah. As a buyer, just always tell as complete of a story as possible as far as your debts and your financial stuff. Because, for example, I've had someone once that I pulled their credit, everything looked great. Their debt to income and all that was great. But then as we got further along in the process, come to find out that they had bought a car a week before or maybe even sooner. So it didn't show up on the credit report yet, but they didn't say anything, and they didn't think to say anything about it, I guess. But it showed up later, and so that affects things. So whenever you come in to talk to us about buying a house, we just got to hash it all out and get all of your information. That's just what's going to create the smoothest process for everybody.
On that note, another thing that just came to mind was deposits. Large deposits.
Ooh, that's a good one.
So we have to be able to source and season all of the funds that are being used. So if you have large deposits in your bank account, because we're going to see those bank statements, they better they better have a good story, not a good story, but like we better be able to explain where that deposit, and we have to have paperwork.
And it's usually pretty hard to do.
Especially if it's cash.
Mm-hmm.
Like if you deposit $4,000 cash in your bank account,
dude, that's always an uphill battle, and that's something that we run into a lot. Yeah. So that's just kind of a general rule of thumb. If you're thinking about buying a house soon, or just if you have a bunch of money in your safe at your house, just go deposit it into your bank, because once it's seasoned in there, meaning, so when we're going through the loan process, we have to get your most recent 2 months bank statements. So if you're wanting to close in July, we're going to have your June and I hate going backwards, May, your June and your May statement. So if you made those large deposits in June or May, it's going to show up in that statement. So that being said, put it in now in case, it takes you 3 months to find a house. That way, when we get those bank statements, it's not going to show up because you had already deposited. At that point, that money's seasoned is what they call it.
Yeah.
And there's ways to do it. I mean, to get the money in there after the fact, but it just makes it a lot more difficult. And sometimes you can't.
Right. Yeah. And I feel like I run into that very often, like, because that's one of the conversations I'll have with my borrowers starting out is, there are costs associated with purchasing a home. There are your down payment, your closing costs. What's your situation in terms of like funds available to close? Oh, I've got the money. This is how much money I have. Great. Just so you know, I'm gonna have to season or source that money. Do you have that in your bank account? Do you have and all the time it comes up? Well, I
don't believe in banks.
Yeah, I've got $1,000 in my bank account, but I've got $10,000 at my house.
Yeah. Yeah. Okay. Now we got to figure out how to use that $10,000. Yeah.
Which, I mean, if you have consistently been making withdrawals from your bank, we can source that money.
It just takes more. It's just hard.
Yeah. Then we have to get more bank statements and.
But it can be done. And again, that kind of goes back to the local lender thing. Is that's a lot more work for the lender, but we're willing to do that. Right. A lot of lenders are just like, oh, this is a cash deposit. Sorry, we can't help.
Right.
They're not going to figure out what they need to do. I've had people had a bunch of cash at home because they had sold a vehicle or something. There's a way to do that. We usually have to have a bill of sale. We have to have like a Kelley Blue Book to support how much you sold it for. Because basically what the government's doing, or the powers that be set all these regulations, is they just want to make sure you're not using illegal funds. And they're wanting to make sure that you're not saying, I sold a vehicle. So if you're depositing $10,000 and you just sold a car that's obviously not worth that, they're going to verify that your story, it has to all match up and add up and make sense. Yep.
What else?
I'm trying to think if I have any other stories.
So many things. Loans are so
They're so complex, man. People don't understand how complex they are. And that's why people shouldn't feel bad. I mean, I have first-time home buyers all the time saying, like, apologizing for asking questions. Like, listen, you're not expected to know this stuff, especially if you've never done it before. This is not something that any of us learned how to do in school. It's something that you kind of learn as you go. So, yeah, it's okay to have questions. They're expected.
I guess one note for the self-employed borrower, you have to prepare a lot longer than a normal W-2 borrower.
Yep.
So I'll bring that up. The reason is because when you're self-employed, the way we are able to qualify your income is through your taxes. And so a lot of self-employed borrowers, when they do their taxes, write off as much
understandably so,
as they can, so they avoid paying taxes. Well, when you're doing that, the way that looks income wise is you're not making as much income, and so
you kind of have to prepare years in advance and start doing that, or expect to have to use a specialty type of loan, which we have those too. But you've got to go into that with the expectation of, this is not a conventional mortgage. My rate might be a little bit higher than what I'm used to seeing advertised. So there's ways to get it done, but there's a give and a take to it. Yeah, that's a good point.
Yeah, we really could talk all day long about the complexities and intricacies of loans, but
We don't have all day.
we don't have all day.
Yeah.
And everybody's situation is so unique, and so let's sit down with you and get your story and your whole financial profile, and that's how we'll walk you through.
That's the best piece of advice is just come in and talk to us so that we can talk to you about your unique situation. Because I see something new every day, something I haven't seen before.
Every single loan is different.
Yep.
That is something that I've learned.
Yeah.
And you would think, like, especially here, everybody works at the mine. Not everybody.
Right. But you would think that at some point you've seen it all.
You've seen it all.
Yeah.
They're all the same, but no, every single one is different. It's got its own thing about it that you have to get through. But
and there's no harm or no cost in asking questions. You come and talk to us, and we'll talk to you. I tell people all the time, because I think it's just like the world that we're in people feel like they're just gonna be charged for everything, but I tell people all the time, you're literally not going to...
We should have like a tip tablet, right?
Have a tip jar. Tip jar on our desk, yeah. But, yeah.
Everybody else does.
Literally, right?
I'm paying tips at my dentist, for goodness. I'm just kidding.
What bothers me is when there's a tip jar at like a drive-through. I'm like, why? Anyways.
I got roasted online about that. Have I told you that story?
No.
It was during COVID. It was right after COVID was happening. I posted on Facebook. I can't remember what exactly I said, but the gist of it was, do you tip at restaurants
when you're not being served
before receiving your food?
Right.
Like, I'll go and I'll pay for whatever, and they'll flip the thing around. It's going to ask you one more question.
Yeah.
Like, what am I tipping for here? For you flipping the tablet? That's all you've done so far.
Yeah.
Yeah. I asked that on Facebook, and a lot of people, I didn't even give an opinion on what I do. I was just asking, and a lot of people were like, oh, you got a tip. There's it's COVID, we're going through whatever. A lot of these people haven't worked in weeks, and now they're finally getting back to work, and blah blah blah. And then other people were like, no, you don't tip unless you've received some sort of service, or your food was great, or whatever.
Right.
I think I'm on the latter side.
Yeah. It's not my... Yeah, I agree.
Courtney, edit that part out.
No, Courtney, leave it in. That's one of those subjects where you're going to have strong believers on both sides.
Yeah.
And both probably have good points. But on that note, just because you have a different view of me, I'm not going to be mad at you for having that view. But how come you're mad at me for having mine?
Yeah.
Why can't we just all get along? Why did we get to tips? What were we talking about? I was trying to make a point of you're never going to pay us a dime until you actually close on a loan.
Yeah.
So, which is the end goal. So
also, I think it's illegal for us to take tips.
Oh, probably. Yeah. That's all. We're 100% joking about all of that. But yeah, so if you come in and talk to us about, our advice and our conversation, our consultation, if you want to call it that, there's absolutely no charge for that. So if you have questions about any type of loan, feel free to come into our office and sit down, and we can talk about what you're trying to do, talk about your goals, and help you come up with a plan to do what you want to do. I tell people all the time too, that my job is to tell you what your options are. Buying a house is a very personal, decision. And so you budget yourself, you do, this is what your options are. It's your decision to decide if you want to do it and how much of a loan you need and all of that. I was talking to someone before this, was it this week? Yeah, I was talking to a client. They can qualify. They own a house currently. They can qualify for another one. They were considering making the one that they're currently in an investment property and renting it out, and then anyways buying a new primary residence. And they were kind of weighing their options. I'm in the boat of, if you can keep your house, keep it, because I just think that investments or that real estate is a great investment. But they were kind of breaking it down. Well, I could sell this house and put all of that as a down payment to here, and then my monthly. So they were more concerned about their monthly payment, and which makes sense. That's so I gave them their options, and now they're kind of mulling it over about kind of what they want to do, but they know that they can qualify without selling the house. Right. In my opinion, keep that house, keep that interest rate, turn it into a rental property. Even if you're breaking even, or even if you're paying a little bit more, in my opinion, that pays off 10 years down the road whenever that property is worth a lot more. Yeah. So I'm in that camp of, if I can, I'm in the stage of trying to buy as many rental properties as I can, and then later in life, maybe sell them all out and then enjoy life. But a lot of people, they're like, no, I don't want the debt. I want to put all of my equity of here into this house and get rid of that debt. And I understand that too. So our job is to give you options, and that's what we're good at.
Yeah. By the way, I agree with your position on home ownership.
Dude, I have
keep it if you can.
Yeah, I have so much debt, but it's all good debt in my opinion.
Yeah.
Like,
I'm not going to say how much
mortgage debt is, because I know that I know what the potential of that debt is going to bring me 10 years down the road.
Right. It's a good retirement plan.
Yeah, dude.
Cool.
That's my plan.
I got to get running. I got things I got to do.
All right, man.
This has been fun.
I'm going to stay on and just do my own Theo. Just keep talking to myself.
Okay, everybody quit listening now.
All right. Okay, man.
Just kidding.
Talk to you later. Thanks, everyone.
I just realized I rode with you.
Like Gucci.